With the dumpster fire movements in Nifty 50 today, Bombay market have finally closed, and let's dissect the Nifty 50. So today's market was like kind of a. By the way, before we start, this is purely for educational purposes only, not a financial advice. I don't care about your trades. I'm just putting out my opinions. So let's move on to Nifty 50's chart. Now, looking at the Nifty 50's chart, we can clearly see that we had a doji and very rough day for intraday traders. Nifty started, first of all, Nifty started way of a wonky donkey kind of way. Like, let me show you in chart. Nifty started with a gap down, then we went for a bottom, then we started like swinging round and round here. And finally, when we broke down this trend line, we like fall like a knife, then got up, and then we are going on a sideways. I don't know what's gonna happen. So this is my view right now. Nifty is clearly waiting for Fed's reaction, and we will see what's gonna happen when the decision of Fed, whether lowering interest rate by 0.25 basis point or 50 basis point gets priced into the market. Now I know that the Dow Jones theory also included of every news has already baked into the markets, but I still think that markets will be going up a little bit, like testing the 26,000 levels with the Fed's news cut news. Now let's move to the Bank Nifty. Now Bank Nifty is kind of at a interesting place due to the like what happened today. We gapped down here, opened right here, then we clearly were in bullish stand for whole first half, and right around the 1 o'clock or 1:15, the Nifty was like, nah bro, I'm done, I'm not going to do anything, and we went into the sideways. Now looking at this chart, I will say Nifty and Bank Nifty are not worthy of option buying. Probably if I'm going to trade tomorrow, I will be selling the options or taking the trades into the future, because that way I can manage my position sizing as well as risk management. Now let's move on to the major components of the markets. So here we have HDFC Bank, which has been clearly in a sideways market, and looking at the chart, I will say it will be continuing this sideways till we get next quarter's result or get a breakdown or breakout. The point being that this looks like a clear, let me draw it clearly for you. This looks like a M pattern right now, but I don't know is this a clear thing or is this just like a hunky donkey, I will look around and find out type of sit. Now let's move on to next HDFC. Now we have Reliance. Now Reliance Industries kind of look like a head and shoulder. I will be watching for it because probably whenever I have made a huge ton of intraday profit in equity, that has been this fellow guy only. Now this looks like a head and shoulder pattern. I don't know whether it's going to be a confirming here. This is the line which is about 1500. If this breakdowns, I will probably taking a trade towards 1400 or something in the futures market, and probably I'm 80% sure about this trade. I will be taking this trade, and I need to learn on my. What the fuck is wrong with you guys? Okay, done. Now let's move on to the next sector. Now we have ICICI Bank. Now ICICI Bank is clearly in huge sideways, like always, because they don't have any direction. Like as the RBI has already pushed down on the what do you call interest rate, I believe we are at currently sitting at 5.25% for the repo rate at the RBI, and still the lending and the whole circulation, which is a thing, is kind of a dumpster fire. We are not getting huge liquidity. Even RBI has said that they are going to be doing open market operations to provide liquidity in the market. So I believe there's something going on underneath. There are a lot of cockroaches in the kitchen, and I am probably looking for a pesticide control thing, or whatever we call, for shadowing crash. Now let's move on to Infosys. Now, honestly, I don't care about the Indian IT sector because they don't value their employees. There have been a huge problem with the Indian IT companies where they are firing their highly respectable senior developers and whatever. And I don't want to go deep dive into this video, but I will be putting out an video on that as well. Now, looking at this chart, I will say we are probably going to see no reaction from the Infosys. The point being, currently, USD INR is sitting at 90 rupees, and in order to get a huge pump into the IT sector, we will need this USD INR to going towards the 91 or probably 92, as demand has been falling from the US economy. The point being, they have clear signs of K-shaped recovery in the US market, which leads to less spending, which again leads to companies cutting down on costs, which leads to more firing, and which leads to more and more conservative conservative strategies at the companies and all. Also, the US debt being a huge problem. Now, let's move on to the next part, which is LNT. Now, I don't have any strong opinion. I don't look at the charts. I'm like, this is a way, this is also a trend line. You can look like this is going to be, and here are the levels you can watch out if you want to trade. But to be honest, daily range is looking about like plus minus 10, 11 rupees. That is going to be 22 rupees of a range for trading in LNT. And out of which, I probably believe if you go for capturing the trade, you will be able to capture about 5 to 6 rupees per what we call stock. Now let's move on to the next chart. Now we are at the SBI. SBI has clearly gave us a huge trend, and this looks like a Davos box in which it has been consolidating towards this. I believe after giving this kind of like this and this, I believe we are going to have a rocky, rocky December here, and probably we will be moving towards a new lifetime high before coming down towards a crash or going up. Like, at this point, I don't have any specific opinion. Now let's move on to ITC. Now, looking at the ITC, there have been two clear downtrends in the ITC, but this has been a gap. Now, looking at my framework of trading, I will be taking an swing trade upside here for about 120 to 104 to 450 level. Now let's move on to next one, that is going to be a TCS. TCS, they have a huge exposure into the US markets, and I don't know whether they are going to continue in this market. Looks like TCS is going up on the basis of USD INR only, but the point being, the huge point for me is, I believe the USD INR falling will be less than whatever we will be getting we will get with the forex depreciation. Yeah. Now let's move on to the next part. So this is an overview of Nifty 50. Currently, looking at the current chart, I believe we are perfectly heading towards for this perspective. And now we will get on my view. By the way, these are the momentum score. I believe markets are index wise. If we are talking about the index, we are clearly in a huge momentum sector. Whether it's going to be upwards or downwards, I don't know. So I will believe this is a wolf market, whereas the pressure from the DIS and FIS seems to be quite uh, downwards facing, because the data has been come out. The today's data has been very bearish for FII and pro traders, and somehow clients are retailers are buying the index and everything. So I believe there is going to be a crash or something. Now let's move on to the my views part. So what I believe. Let's come to the so this is my prediction for tomorrow's opening. I believe, where is my pen or brush? Like, we are probably going to be opening like here or here range. This is my range where we are going to be opening here, and I believe we are going to check. We are going to just touch about like 20, 59,400 or 59,500 before going to come down right here. But or in other case, we are probably going to be sideways or something like that. Now coming on to the Nifty is going to be a dumpster fire like always, and I'm gonna switch to 5 minute chart. I believe before coming down towards here, like breaking 2500, I believe the Nifty 50 is going towards upside here. Then we will see a rejection here, some like 10th of December, and then we will see a huge like this kind of a moment here. So that's all for today. This is Ronnie Singh, and see you later.